Hello, I'm Carolyn Herbert from the Finance News Network, and joining me from GPT Metro Office Fund is Fund Manager Chris Blackmore. Chris, welcome back.
Thanks, Carolyn. It's a pleasure to be here.
Chris, you've just announced your full year results for financial year 2015. What were the highlights?
Yes, so we recorded a profit of $35.7 million. Importantly, earnings at 11.28 cents per unit were above the PDS forecast, and the declared distribution at 10.15 cents also above the PDS forecast. Importantly, we've restated our guidance for the PDS period from IPO to the 31st of December, with earnings at 3% above the PDS forecast and distributions at 2% above the PDS forecast. We've seen a $24 million increase in valuations to $401.8 million, and our NTA has risen to $2.09 per unit. Also importantly, our gearing has come in at 28.9%.
Thanks, Chris. So what was behind the increase in earnings per unit?
Yeah, so there are a number of component parts of that, including the fact that the fund traded for 3 additional days ahead of the PDS forecast. We had some savings in transaction costs at IPO. We had savings in interest costs along the way, and we also had some surrender income from tenants as well.
And has this flown through to the distribution? And if so, what does it bring the full year distribution to?
Yes, so it has flowed through to the distribution. The distribution to 30 June is 10.15 cents, and for the whole PDS period to the 31st of December, it's 2% above our PDS guidance.
So to recap, GMF hold a portfolio of 6 A-grade office spaces across the eastern seaboard. What's the occupancy rate and the average weighted lease expiry?
So the occupancy is sitting at 95.5%, and our weighted average lease expiry is 6.3 years.
Thanks, Chris. And what sort of success has the fund had in securing new leases over the year?
Yeah, so over the period we've had success in securing new leases at 5 tenancies in quads 2 and 3, and also we have secured a 7-year lease extension with McConnell Dowell at our Vantage asset in Hawthorn. They'll take a 7-year term through to March 2023.
And can you tell us what's the gearing level for the fund, and what are your plans for gearing levels over the next 12 months?
So the gearing level is sitting at 28.9%, comfortably within the 25 to 40% range, and that's a level at which we feel comfortable going forwards.
Last question now, Chris. What's your outlook for metro office markets for the second half?
Yeah, so we see the metropolitan office markets of having balanced fundamentals. We think there's a very stable outlook. We've seen rental growth come through, moderate vacancy. We've also seen cap rates compress, and the outlook is very favourable.
Chris, thank you for the update.
Thank you very much.